there. Ready for a deep dive into that EQAI morning briefing you got today? The one for October 10th. We'll cut through the noise and get right to it, all right? We've got market jitters, Tesla's at it again with robotaxis, and even some crypto crackdowns making waves.
It's a lot to unpack.
It really is. So first up, the S&P 500 looking at 0.3% drop and the Nasdaq down 0.5%. Not exactly a day for confetti on Wall Street. Seems like that CKI data, that consumer price index, came in hotter than expected, and jobless claims, well, they missed the mark too. Not exactly inspiring confidence, is it? What's your take on this?
It's a classic case of the markets really hating uncertainty. That CPI reading being higher than expected, well, it suggests inflation is stickier than we thought. And the jobless claims just add fuel to that fire. Investors are basically tapping the brakes, reassessing things with these potential economic red flags waving around.
A bit of a wait and see then.
Precisely. This is where that bond market comes in. Your briefing mentioned a possible, what did they call it? A tailwind in bonds. Suggests a shift towards less risky assets, right? Classic risk aversion. Uncertainty goes up, bonds start looking good.
Makes sense. Speaking of uncertainty, though, Delta Airlines is feeling the heat. Stock dipped 1.4% after their Q4 guidance came in softer than expected. What's interesting is they're pointing to, get this, election season, suggesting folks might hold off on travel plans, hold water or no.
Actually, yeah, we've seen this before. Election years often bring economic uncertainty. No one wants to splurge on a big vacation when things are shaky. Delta might be onto something, but too early to say if it's just them or everyone.
From cautious travelers to the vehicles of the future, because your briefing also mentioned Tesla's upcoming Robotaxi event, a two-seater, wing-doored electric vehicle. It's like something out of a movie. But of course, it comes with a catch, not expected until 2027. And knowing Elon and those, shall we say, aspirational timelines, think they'll pull it off?
Tesla, they know innovation, I'll give them that. But 2027 for a fully autonomous robotaxi, that's ambitious, even for them. This self-driving tech is complex, and don't even get me started on the regulations. It's exciting to imagine, sure, but I'd keep a healthy dose of skepticism handy for now. Tesla's had these timelines before.
So we've got travelers maybe getting cold feet, a stock market bracing for impact, and Tesla, well, they're being Tesla. Let's switch gears to fintech, where even the big dogs are feeling the pressure. Your briefing mentioned PayPal, stock downgrade despite a strong year. What gives?
It shows that past success is no guarantee in the world of digital payments. That analysts worries about PayPal's long-term outcomes, likely because the fintech landscape is getting crowded and fast.
Seems like a new fintech startup pops up every day.
Exactly. They're nimble, they're innovative, and many are laser-focused on very specific niches. Add to that the constantly shifting regulations, changing consumer tastes, and it's no wonder even a giant like PayPal feels the pressure. They're not the only game in town anymore.
Right. No resting on your laurels, especially in tech. Speaking of adapting, let's talk crypto. Dubai, cracking down on unlicensed crypto firms. Fines between $13,600 to $27,200. At the same time, South Korea's Financial Services Commission is looking into the Upbit crypto exchange. Why the sudden regulatory blitz?
It's simple. Regulators around the world, they're realizing they can't ignore crypto any longer. It's too big, too fast, and the risks, well, they're investor protection, money laundering, you name it. Take Dubai, aiming to be a global crypto hub, right? Cracking down on those unlicensed firms builds trust, attracts serious investors. Same idea with that Upbit investigation in South Korea, ensuring fair markets, preventing monopolies.
So the Wild West era of crypto is coming to a close.
That's one way to put it. Globally, things are moving towards more oversight, more regulations. Some in the crypto world won't be happy, but ultimately, it's good for everyone. Clear rules, clear guidelines, that means more stability, more legitimacy, and that leads to wider adoption. Crypto's growing up.
And on that note of a maturing market, we'll be back in a bit to discuss the metaverse, AI, and more. We're back and ready to dive into more of your October 10th briefing. We've covered market jitters, Tesla's self-driving dreams, and the evolving world of crypto regulation. Up next, the world of gaming, where a familiar name is making some interesting moves. Your briefing mentioned Ubisoft, the company behind games like Assassin's Creed, is stepping into Web3 gaming with a new title, Champions Tactics. They're incorporating blockchain technology and player-owned assets. What does this really mean for gamers? Is it hype or the future?
It's definitely a bold move. It reflects a trend we're seeing of game developers really exploring what blockchain can do. For gamers, the key here is ownership. Imagine playing a game, earning a rare item, but instead of it just existing in the game, it's a digital asset. You own it. You could trade it, sell it, Maybe even use it in different games. That's the promise of Web3 gaming and what Ubisoft is testing out.
So it's like taking those in-game achievements and turning them into something real, something with value outside the game.
Exactly. It changes how players interact with the games. It's early days, lots of questions, but the potential is huge.
From virtual worlds back to the very real world of finance, let's circle back to the stock market. Your briefing mentioned U.S. stock futures are pointing towards a decline. S&P 500 and Nasdaq both expected to open lower. What's driving this?
It's a few things. First, that hotter than expected CPI data we talked about earlier, it's still on investors' minds. Persistent inflation makes the markets nervous.
Inflation's back to spook the markets.
You could say that. Plus, there's the whole question of interest rates. The Federal Reserve has been raising rates to fight inflation, but it's unclear when they'll stop. This uncertainty makes investors hesitant.
Sounds like we're in for a bumpy ride in the markets for a while.
Volatility is the name of the game right now.
Speaking of volatility, remember all the AI hype from earlier this year? Every investor wanted a piece of the action. But your briefing suggests things might be cooling down. Is the AI gold rush over before it really began?
Not necessarily. What we're seeing is normal. The initial hype around a new technology always attracts speculative investors. As things settle, though, we see a shift. Investors get more discerning. They ask tougher questions. Which companies have strong foundations? Who is truly innovating?
So it's about separating hype from reality.
Exactly. And this cooling off period can be a good thing. It allows for more sustainable growth in the long run.
While some investors are hitting the brakes on AI, others are still seeing its potential. Your briefing highlighted Ether, launching a $100 million fund focused on AI and gaming. What's special about their approach?
Ether wants to revolutionize GPU access for developers. GPUs, those graphics processing units, are essential for both gaming and AI. They power the visuals and simulations in modern games and are crucial for training and running AI algorithms.
So more GPUs mean more power for both gaming and AI development.
Precisely. By making GPUs more accessible, Ether could unleash a wave of innovation in both gaming and AI.
Sounds like a win-win. But it's not all fun and games in the world of tech. Your briefing mentioned Dubai's crackdown on unlicensed crypto firms and South Korea's investigation into the Upit exchange. The crypto world is under scrutiny. What do you make of this?
Those actions show a global shift toward regulating crypto. Governments are realizing they can't ignore it anymore. They're trying to find a balance between innovation, consumer protection, market integrity, and preventing illegal activities.
So it's a balancing act.
Absolutely. And the approach to regulation varies. Some countries are more hands-off, while others, like Dubai and South Korea, are stricter.
It'll be interesting to see how these regulations develop and what they mean for the future of crypto. From market dips and peaks to the potential of AI, we've covered a lot. Stay tuned as we dive into cannabis, explore AI-powered drug discovery, and uncover how these stories impact you. And we're back for the final stretch of our deep dive into your October 10th briefing. We've covered market trends, the gaming world, and the scrutiny on crypto. Now for something completely different, cannabis. Your briefing mentioned Tilray, a cannabis and beverage company. Their stock is up, even though they missed revenue expectations. Their strategy seems to be riding that wave of cannabis legalization. Risky bet, or is there something there?
Tilray's not alone in betting on legalization. A lot of investors see cannabis as this huge untapped market, especially with more countries legalizing it, right? This industry is practically a newborn baby. As governments loosen those restrictions, whether it's for medical use or recreational, it opens up so many doors for companies like Tilray.
So it's about getting in early on the ground floor of this potentially massive market.
Right, but it's not all smooth sailing.
Yet legalization doesn't magically make all the problems disappear overnight, does it? What kind of hurdles are we talking about here for the cannabis industry?
Well, even with legalization, there's a maze of regulations, licensing. It's a lot to navigate. Plus, good luck getting a bank loan when cannabis is still federally illegal in many places. They struggle to open accounts, process payments, all those basic things. It really hampers growth.
Trying to run a legitimate business with one hand tied behind your back, basically.
Exactly. And then there's the whole social stigma around cannabis. That won't change overnight, takes time, education.
Speaking of challenges in innovation, let's pivot to healthcare. Your briefing highlighted those advancements in AI-powered drug discovery. Can you break that down for us?
Imagine developing life-saving drugs for less money and way faster. That's AI in drug discovery. The traditional way is so slow, so expensive. Years, billions of dollars to bring one drug to market. AI can analyze huge amounts of data, molecular structures in a flash. It finds promising drug candidates, even predicts their effectiveness and side effects.
It's like having a superpowered research assistant that never sleeps. Incredible.
Yeah.
What are some of the most exciting breakthroughs we're seeing with AI in drug development?
Personalized medicine. AI is already shaking things up there. It analyzes a patient's genes, medical history, lifestyle, everything. Then it helps tailor treatments to that specific person. More effective therapies, fewer side effects, better outcomes.
From customized treatments to potentially curing diseases, AI could completely transform healthcare. Talk about technology making a real difference. As we wrap up this deep dive, one thing really stands out to me: how interconnected everything is. We talked about market anxieties, regulations, even AI's potential impact on medicine. They all affect one another in ways we might not realize. So next time you check your portfolio, read a headline, or even just scroll through your feed, take a moment to think about the bigger picture. How do all these seemingly separate stories connect? What trends are shaping our world? Keep those questions in mind, and until next time, happy exploring.